Welcome back to our channel. Today, we're diving into the exciting world of binary trading. If you've ever wondered how to maximize your profits in a fast-paced market, you're in the right place. In this video, we'll reveal a powerful binary trading strategy that's not only safe, but also commonly seen in charts, with a winning ratio of up to 80%. Whether you're a complete beginner or a seasoned pro, this strategy is easy to understand and simple to apply to your trades. We'll break down the key concepts, share practical tips, and show you exactly how to implement this strategy step by step. So grab your notebook, and let's get started on the journey to becoming a more confident and profitable trader. First, we need to set our chart type to Heiken Ashi. This type of chart smooths out price action and helps identify trends more clearly. To do this, simply go to the chart settings and select Heiken Ashi from the chart type options. Next, we need to set the time frame to 5 seconds. This will allow us to see market fluctuations more frequently and make quick decisions based on our strategy. So, select 5s. After that, we'll set the trade duration to 30 seconds. This gives enough time for our signals to develop while keeping the trades quick. In the trade duration settings, adjust the duration to 30 seconds to ensure your trades align with our strategy. In the OTC market, use 30-second trades, and for the normal market, you can set the duration to either 30 seconds or 1 minute. Now we need to add some indicators to our trading strategy. First, let's add the Bollinger Bands. For the settings, set the period to 14 and the deviation to 2. Next, we'll add the zigzag indicator. For this, simply change the depth setting from 12 to 34. This adjustment will help us better identify price trends and reversals. Now the setup is complete. With the Heiken Ashi chart, a 5-second time frame, a 30-second trade duration, Bollinger Bands, and the zigzag indicator, we're ready to analyze the market and start trading. To start with this strategy, let's take a closer look at the Bollinger Bands indicator. It consists of 3 lines and 2 zones. We'll refer to the area between the top line and the middle line as the upper zone, and the area between the middle line and the bottom line as the lower zone. To determine the trade direction, start by following the direction indicated by the zigzag indicator. Once you have clarity on whether to trade up or down, it's time to pinpoint the entry point. Specifically, you'll look for green candles in the upper zone. When the first red candle appears, this serves as your potential entry signal. However, it's crucial that this red candle is within the upper zone, not the lower zone, as entering based on a candle outside the upper zone increases the risk of a false signal. Additionally, you must confirm that the zigzag indicator is clearly trending downward, rather than upward. By ensuring both conditions, the red candle in the upper zone and a downward zigzag trend, you create a stronger, more reliable entry point, minimizing risk and enhancing your potential for a successful trade. For example, here you can see how these conditions align to create a valid entry point. So if the zigzag indicator shows an upward trend, the setup changes. Now, you'll need to look for a completely different entry point, in the lower zone. In this case, search for red candles within the lower zone. When the first green candle appears, that's your signal to enter the trade. As you can see in this example, although it's not a perfect representation, it still provides insight into the setup. Ideally, you should see a greater number of red candles in the lower zone before the first green candle, but this example still demonstrates the concept. The beautiful thing about this strategy is its significant presence in the chart. As you can see here, we can just go back a little and we will find several examples. Also, here is an example of an upper example. Now let's go back and conduct some actual experiments on this strategy. As you can see here, when we zoom in, we first notice that the zigzag indicator is trending upward. This indicates that our trade will be bullish. For me, I missed the opportunity to enter a trade, and as you can see, it is currently successful. Now I need to wait for another entry point. As you can see, once a red candle finished inside the lower zone and a green candle started and completed, I entered the trade. You should also handle the chart in the same way. Although it succeeded, it was close to a loss because I delayed about 2 seconds before entering the trade. But don't worry, there are many upcoming examples. Now, after the success of these two trades, I want to set a small challenge to raise $10 to $200. As a spectator, you should never take this kind of risk. I mean, never trade with all your money. The best practice for trading professionally is to use 1% of your capital, or at most 3%. Anything above this value is risky, and I can assure you that you will never make progress. To wrap up, I transformed a $12 investment into $181 in just 1 hour. This shows how effective trading can be when you understand the key indicators. While the potential for profit is high, remember to manage your risk and make informed decisions. With practice and patience, you can achieve similar results or more. Thanks for watching. Don't forget to like, subscribe, and hit that notification bell for more trading tips.